Mr. Edrick, step away from the filing cabinet.
Excuse me, I'm with a client.
IRS criminal investigation. We need you to come with us right now.
This is a mistake. I've done nothing wrong. Everything I filed is legal.
The accounts don't agree with that.
I want my attorney. I want my attorney right now.
This is Andrew Edrick, 44 years old, tax consultant, owner of Edrick Financial Solutions, LLC, operating out of a glass door suite on the 4th floor of a commercial office park in Decatur, Georgia. And in less than 30 seconds, the career he spent 17 years building will be over. Within 72 hours of this footage, IRS criminal investigation special agents would execute search warrants across 3 locations. They would seize hard drives containing over 4,000 client files. They would freeze 6 bank accounts holding a combined $1.1 million. They would find, in a floor safe hidden beneath the carpet in the back office, $214,000 in cash, bound in rubber bands and organized by denomination, 416 fraudulent tax returns, $2.9 million in false refunds claimed over 6 filing seasons, and 416 real people, nurses, mechanics, teachers, retirees, who had no idea their names had been used to steal from the federal government, and who would spend the next 3 years untangling the damage. In the 6 filing seasons, between 2017 and 2022, Andrew Edrick submitted 416 fraudulent federal tax returns through the IRS e-file system. He fabricated income, he fabricated deductions, he fabricated business expenses that never existed, charitable donations that were never made, and dependent children who in some cases had never been born. He claimed refunds averaging $6,971 per return. The IRS paid out $2,903,644 before the scheme collapsed. Of the 416 victims, 298 never knew their returns had been altered. They signed what he put in front of them. They trusted him with their financial lives. Some of them received unexpected letters from the IRS years later, demanding repayment of refunds they had never received for returns they had never actually filed. 22 federal counts, 14 years in federal prison, $2.9 million in restitution, and a loophole in the IRS e-file system that allowed one man to steal nearly $3 million before a single flag was raised. Before we go any further, when was the last time you actually reviewed your tax return line by line before signing it? Drop your answer in the comments. Be honest. And if you haven't subscribed to this channel yet, now is the time. We cover cases like this every single week, cases where trust was exploited, where the system failed, and where real people paid the price. Subscribe and hit the notification bell so you never miss one. Andrew Edrick was born in March 1979 inches, Decatur, Georgia, the second of 4 children, raised in a 2-bedroom house on a quiet street in a neighborhood where everybody knew everybody, where people left their screen doors unlocked in summer and brought food when someone's family had a loss. His father, Raymond Edrick, drove a city bus for DeKalb County for 27 years. Same route, same faces, same wave, out the window every morning. He left the house at 4:45 a.m. and came home by 4. 0 inches the afternoon, smelling like diesel and tired in the bones, but he always made it to dinner. He was the kind of man who balanced his checkbook by hand every Sunday evening, and believed that a man who couldn't account for his own money had no business handling anyone else's. His mother, Carolyn, worked as a claims processor at a regional insurance company in Tucker. She sat in a cubicle for 22 years, reviewing forms, flagging errors, and making sure the numbers matched. She was methodical. She was detail-oriented. She brought those habits home. Andrew was the child who inherited both. By the time he was 11, he was the one helping his mother sort the household bills, utilities, car note, mortgage, into labeled envelopes she kept in a kitchen drawer. By 13, he had built a paper ledger tracking the family's monthly expenses that his mother thought was more organized than anything she used at the office. His father showed it to a neighbor one Sunday afternoon, with the specific pride of a man who doesn't brag but can't always help himself. He graduated from Towers High School in 1997 with a 3.4 gigapascals and a reputation among his teachers as the kid who asked the questions nobody else thought to ask. His math teacher, a woman named Mrs. Patricia Holden, who had been at Towers for 19 years, wrote in his senior recommendation letter that Andrew had an instinct for systems, not just how they worked, but why they were built the way they were. He enrolled at Georgia State University that fall on a partial academic scholarship, majoring in accounting. He worked part-time at a H&R Block office in Stone Mountain during tax season his sophomore and junior years, $9.50 an hour, helping walk-in clients through basic returns, learning how ordinary people related to the tax code, which was to say, with confusion, anxiety, and an enormous amount of trust placed in whoever was sitting across the desk from them. He graduated in May 2001 with a 3.5 gigapascals and immediate job offers from two mid-size Atlanta firms. He took the one that paid more. He was 22 years old. He had $14,000 in student loans and a plan. His first position was as a staff accountant at Harwell and Cross, a regional firm in Buckhead that handled corporate filings for small and mid-sized Georgia businesses. His starting salary was $38,000. Within 18 months, he had been assigned to senior client accounts. Within 3 years, he was running the books for 11 business clients on his own. His performance reviews from those years read like a template. Precise, reliable, clients request him by name, demonstrates unusual maturity for his experience level. In 2005, he passed the CPA exam on his first attempt, scoring in the 89th percentile on the regulation section. He framed the certificate and hung it in his apartment in East Atlanta, next to a photo of his father standing in front of his bus. He was made senior associate in 2007. He was offered a path to partnership in 2009. He turned it down. In 2006, Andrew had started doing something on the side. Evenings and weekends, out of a spare bedroom in his apartment, he began preparing individual tax returns for people in his neighborhood, working families, single mothers, retirees on fixed incomes who couldn't afford the H&R Block fees and didn't trust the pop-up preparers that appeared every January in strip mall storefronts and vanished by April. He charged $75 flat, sometimes less, sometimes nothing. Word spread the way it does in close communities. By 2008, he had more than 80 individual clients coming through his spare bedroom on evenings and weekends. By 2010, that number was over 200. In 2012, he made it official. He left Harwell and Cross, incorporated Edric Financial Solutions LLC, and signed a lease on a suite in a commercial office park in Decatur. He bought a desk, 2 chairs for clients, a printer, and a framed print of the Atlanta skyline for the wall. His pitch was simple. He was local. He understood working people and their finances because he had grown up watching his parents manage theirs. He wasn't going to upsell them on products they didn't need or file a return they didn't understand. He was going to do the job right and be there when they called. Within 2 years, he had 300 clients. Within 4, he had 600. By 2016, Edric Financial Solutions was generating $340,000 a year in legitimate revenue. He had hired 2 part-time assistants. He had upgraded to a larger suite. He had purchased a 2016 Audi A6 that he paid off in 14 months. His Google reviews averaged 4.9 stars. One client wrote, Andrew has done my taxes for 6 years. He is the most honest, most thorough person I have ever trusted with my money. I send everyone I know to him. He read that review more than once. His clients trusted him completely. That trust was the most valuable thing he owned. And in the fall of 2017, he decided to find out exactly how much it was worth. To understand how Andrew Edrick stole $2.9 million from the federal government and from 416 of his own clients, you first have to understand how the IRS e-file system works and why it is uniquely vulnerable to exactly this kind of fraud. The IRS processes approximately 160 million individual tax returns every year. Of those, roughly 93% are filed electronically through the e-file system, a network of software providers and authorized transmitters that move returns directly from tax preparers to the IRS's processing centers. When you hire a tax preparer and they file your return, here is what actually happens. The preparer inputs your financial data into their software. They calculate your liability or refund. They generate the completed return. They present it to you for review, typically as a printed summary or a digital form. You sign a document called Form 8879, the IRS e-file signature authorization, which authorizes the preparer to submit the return electronically on your behalf. The preparer transmits the return through an IRS-approved software platform. The IRS receives it, processes it, and if a refund is owed, deposits the funds into the bank account listed on the return. That bank account does not have to be yours. It can be any bank account. The IRS does not verify that the refund destination account belongs to the person named on the return. The system was designed for speed and convenience. Direct deposit is faster than a paper check. Splitting a refund across multiple accounts is permitted for legitimate reasons, like sending part of a refund directly to a savings account. The vulnerability is structural. A preparer with access to your financial information, your social security number, and your signature on a Form 8879 can alter the return after you've signed it and redirect the refund to any account they control. And the IRS has no mechanism to detect that the account isn't yours before the money moves. The oversight mechanism is the client. The assumption is that the person whose name is on the return will review their bank statements, notice that the expected refund did not arrive, and report the discrepancy. But the assumption fails in a specific and predictable way. When clients trust their preparer completely, when they don't fully understand what a correct return looks like, or when the preparer inflates the refund rather than redirecting one the client expected, giving the client more than they anticipated, while quietly directing a portion to a separate account, clients often don't notice anything at all. They got a refund. It was bigger than they expected. They were happy. The second vulnerability is the e-file authorization form itself. Form 8879 is a one-page document. Most clients sign it without reading it. They trust their preparer. The form authorizes the preparer to submit the return. It does not give the client a line-by-line view of what the return actually contains. A client who signs Form 8879 for a return that has been altered may have no idea until months later, if ever, when the IRS sends a notice about discrepancies. The IRS does audit returns. It does flag statistical anomalies, unusual deduction patterns, refund amounts that fall outside expected ranges for a given income level, Schedule C losses that consistently eliminate tax liability. But the agency processes 160 million returns a year. The detection algorithms are designed to catch patterns across the full population. A single preparer with 600 clients, filing returns that individually look unremarkable, can stay invisible for years. The system was built on one foundational assumption: that the authorized preparer would file what the client had actually signed. It did not account for the preparer who altered the return after the signature was obtained. The first altered return was filed on the 9th of February 2017. The client was a registered nurse named Tanya Brewster, a woman who had been coming to Andrew since 2014. She was 36 years old, earned $68,000 a year at a hospital in DeKalb County, rented a townhouse in Stone Mountain, and was putting $200 a month into a savings account she called her one-day fund. One day a house, one day a vacation, one day something that was hers. She had come to Andrew because her co-worker recommended him, because he was from the neighborhood, because he was one of them, someone who understood what it meant to stretch a dollar and still do things right. Her legitimate return showed a refund of $1,620, based on her withholding and a small education credit for a continuing certification she had completed. Andrew filed a different return. He added $9,800 in fabricated business expenses under a Schedule C, claiming she operated a freelance health consulting business that did not exist. He added $2,700 in charitable contributions to organizations she had never donated to. He directed $4,100 of the resulting refund to an account at a credit union in Marietta, Georgia, held in the name of a newly incorporated entity called Premier Tax Solutions, LLC. He directed the remaining $1,620, the legitimate amount, to Tanya's personal bank account. She received her refund. It was exactly what she expected. She texted Andrew a thank you on her way home. He hadn't stolen from her. He had stolen on her behalf. He had claimed refunds she didn't know she was entitled to, from deductions she didn't know she was claiming, for a business she didn't know she had. The IRS, one day, would disagree with all of it. That day was not today. The following week, he did it again. A warehouse supervisor named Darnell Kiles, $3,600 redirected. A school district clerk named Vanessa Odom, $4,100 redirected. A retired postal worker named Curtis Beaumont, $2,400 redirected. Each one walked out with their expected refund. Each one assumed the man in the tailored shirt behind the fourth floor desk had done right by them. Each one left without knowing that somewhere in the system, a return had been filed in their name, claiming deductions for a business they had never operated, and that a portion of the government's response to that return was now sitting in a credit union account in Marietta. By the end of the 2017 filing season, April 2017, Andrew Edrick had altered 31 returns and redirected $186,400 to accounts he controlled. He had not been caught, so he kept going. In the 2018 filing season, he altered 58 returns. He refined the method. He began varying the types of fabricated deductions, sometimes a Schedule C home-based business, sometimes inflated mortgage interest, sometimes unreimbursed employee expenses. He kept the fabricated amounts proportional to income, staying within statistical ranges that were unlikely to trigger an individual audit. He never inflated any single return by more than 22% above its legitimate refund amount. He studied the IRS's published audit selection criteria the way he had once studied for the CPA exam, methodically, looking for the edges. Total redirected in the 2018 filing season, $394,000. By the 2019 filing season, he had opened 3 separate business entities to receive the fraudulent refunds: Premier Tax Solutions LLC, Southside Business Consulting Inc., and a sole proprietorship registered in a variation of his mother's maiden name. He distributed the incoming refunds across the 3 entities, depositing in amounts below $10,000 to avoid federal currency transaction reporting requirements. Cash was withdrawn within days. The cash went into the floor safe. Total redirected in the 2019 filing season, $541,000. His lifestyle changed in ways that were visible and in ways that weren't. The visible: a 2019 Mercedes-Benz GLE, $474,000, paid in full from a cashier's check drawn on the Southside Business Consulting account in June 2019. A 4-bedroom house in Lithonia, Georgia, purchased in September 2019 for $780,000, a 30-year mortgage, but with a $290,000 down payment that traced back through 2 transfers to Premier Tax Solutions. Private school enrollment for his 2 sons at a Christian academy in the northeast Atlanta suburbs. $22,000 per year per child, beginning September 2019. A family vacation to Miami and then Cancun in December 2019. Business class both ways, 10 nights total. The invisible, the floor safe. The cash, which accumulated faster than he could spend it plausibly. The growing weight of a thing he had decided, early on, not to look at directly. His clients still sent referrals. His Google reviews still averaged 4.9 stars. A new one appeared in January 2020 from a client he had known for 4 years. It read, "I trust Andrew with my life, not just my taxes. He is the most honest man I know." He read it sitting at his desk at 7:30 inches the morning before his first appointment. He did not delete it. In the 2020 filing season, returns filed between February and July 2020. He altered 79 returns. The COVID-19 pandemic had expanded refundable tax credits dramatically. The child tax credit, the earned income tax credit, enhanced credits for dependent care. The IRS was processing returns under emergency conditions with a reduced workforce and a backlog measured in millions. The audit selection algorithms had been deprioritized. The window was wider than it had ever been. He drove the Mercedes through it. Total redirected in the 2020 filing season, $618,000. By the 2021 filing season, the operation was generating more money than Andrew could reasonably account for in any version of his legitimate life. He had stopped keeping accurate books for Edric Financial Solutions. He had stopped filing his own returns accurately. He who had built a career on the precision of other people's numbers now filed his own returns with fictional figures. He owed the IRS $340,000 in personal taxes he had not paid. He altered 87 returns in the 2021 filing season. In March 2022, a client named Dorothy Washington came in for her annual appointment. She was 64 years old, a school district cafeteria supervisor who had been coming to Andrew since 2016. She had received a letter from the IRS the previous November, a CP-2000 notice for tax year 2020, indicating that the income reported on her return did not match what her employer had reported. The IRS was proposing additional taxes of $3,800. She handed the letter to Andrew across the desk. He reviewed it. He told her it was a common IRS error, a data matching issue. He told her he would handle it. He drafted a response on her behalf. She had given him power of attorney for correspondence purposes, as many of his clients did, and submitted it to the IRS. The letter disputed the IRS's finding and provided documentation supporting the return as filed. The documentation included fabricated receipts. The IRS withdrew the notice in June 2022. Dorothy Washington thanked him with a sweet potato pie she made herself. He accepted it graciously. He altered her return again that same filing season. He filed 119 altered returns in the 2022 filing season, the largest single-year volume of the entire scheme, with returns submitted between February and October 2022. The floor safe required a second shelf. The beginning of the end came in October 2022, not because of a whistleblower, not because a client examined their bank statement with unusual care, not because the IRS's automated fraud detection system flagged an anomaly. It came because of a divorce. Darnell Kiles, the warehouse supervisor whose return Andrew had altered in 2017, was finalizing a divorce settlement in the fall of 2022. His attorney had requested complete financial records for the preceding 7 years. Bank statements, tax returns, W-2/everything. Kiles had paper copies of the returns Andrew had given him to keep. He pulled the 2017 return from a folder in his filing cabinet. It didn't match what the IRS had on file. His attorney, a family law practitioner in DeKalb County named Patricia Odom, recognized immediately that the discrepancy was not a clerical error. The return on file with the IRS included a Schedule C for a sole proprietorship, Kiles's sole proprietorship that Darnell Kiles had never operated, had never heard of, and had certainly never disclosed to Andrew Edrick. Odom filed a complaint with the IRS Taxpayer Advocate Service on the 19th of October, 2022. The complaint was routed to the IRS Criminal Investigation Division's Atlanta field office within 10 days. Special Agent Renee Hargrove was assigned to the intake review. An 11-year veteran of financial crimes investigation, she had worked identity theft, refund, fraud, offshore account concealment, and payroll tax schemes. What she saw in the Kiles complaint was familiar in structure and new only in its specific mechanism. She pulled Darnell Kiles's full IRS account history. She compared it to the return he had retained. The discrepancies were not subtle. She ran a query on Edrick Financial Solutions LLC as an authorized e-file transmitter. She pulled the EFIN electronic filing identification number associated with the firm and requested a cross-reference of all returns filed under that number for tax years 2017 through 2022. The query returned 3,847 returns. She began a structured review, flagging returns that included Schedule C activity for clients whose primary income source was wages. Clients who, based on their W-2 income, had no plausible reason to operate a sole proprietorship. She flagged returns with charitable deduction amounts above the statistical average for their income range. She flagged returns where the listed refund account did not match the client's primary financial institution. 6 weeks later, by mid-December 2022, she had flagged 312 returns for further examination. She reached out to 40 of the flagged clients directly by mail, asking them to confirm whether the returns on file with the IRS matched what they had received from their preparer. 29 of the 40 responded within 3 weeks. 23 of them reported discrepancies. On the 14th of December 2022, Special Agent Hargrove presented her preliminary findings to the U.S. Attorney's Office for the Northern District of Georgia. The prosecution team opened a grand jury investigation the following week. Over the next 3 months, December 2022 through March 2023, investigators contacted all 416 clients of Edrick Financial Solutions. They subpoenaed Andrew's bank records, the records of all 3 shell entities, his personal financial records, and the records of the Lithonia property. The money trail was not complicated. It was simply large. $2,903,644 had moved from fraudulent IRS refunds through 3 shell entities into Andrew Edrick's personal financial life. The floor safe held $214,000 in cash. The Lithonia house held $290,000 in fraudulent funds in its down payment. The Mercedes had been purchased with stolen money. 3 years of private school tuition from September 2019 through June 2022 had been paid with stolen money. The smoking gun was a folder found on Andrew's office computer. The folder was named with the kind of organizational precision that had once earned him consistent praise from supervisors. Client returns amended. It contained 416 files. Each file held 2 versions of a client's return, the version given to the client and the version filed with the IRS. They were not the same. The 7th of March 2023, Tuesday, 9:14 inches the morning, Decatur, Georgia. The temperature was 51 degrees. The parking lot of the Glenwood Park Office Center held a thin layer of morning fog that hadn't burned off yet. Andrew Edrick had arrived at 8:45, as he did every Tuesday. He had stopped at a Chick-fil-A on Memorial Drive for a coffee and a chicken biscuit he ate in the car. He had swiped his access card at the lobby entrance, taken the elevator to 4, unlocked the suite, turned on the lights, and settled behind his desk for the first client of the day, a young couple, married 2 years, filing jointly for the first time, nervous about doing it wrong. The appointment went smoothly. Andrew was warm. He was clear. He walked them through every line and told them what to expect. He told them he would have the draft ready by Friday. They thanked him, shook his hand, and left. Andrew refilled his coffee. He opened his client management software. He began reviewing the next file. At 9:14 a.m., 3 vehicles pulled into the Glenwood Park Office Center parking lot simultaneously. 2 dark SUVs and a marked IRS criminal investigation vehicle. Special Agent Renee Hargrove led the team through the lobby and up the elevator. She was accompanied by 2 additional CI agents, a forensic examiner from the Atlanta field office, and a Gwinnett County Sheriff's deputy carrying a copy of the search warrant. The suite door was unlocked. They entered without knocking. Andrew Edrick looked up from his desk. He took in 5 people standing in his doorway. He took in the badges. He took in the warrant. He took in Renee Hargrove's face, professionally neutral, steady, the face of someone who has done this many times and brings no drama to it. He did not run. He did not shout. He set his coffee down. Mr. Edrick, step away from the filing cabinet. He was not near the filing cabinet. He was behind his desk. Excuse me, I'm with a client. The client had left 16 minutes ago. IRS criminal investigation. We need you to come with us right now. This is a mistake. I've done nothing wrong. Everything I file is legal. Sir, the accounts don't agree with that. He stood slowly. He straightened his jacket. There was something deliberate about how he moved, controlled, measured that Hargrove would later describe in her report as consistent with someone who had thought about this moment and decided in advance how he would carry himself through it. I want my attorney. I want my attorney right now. You can call your attorney from the field office. Please turn around. He did not turn around immediately. This is my office. These are my client's files. You don't walk in here like this. Hargrove stepped forward. We have a warrant for your arrest and for the search of this premises. Turn around, Mr. Edrick. He turned around. The handcuffs clicked into place at 9:17 a.m. 2 staff members from the suite across the hall, a small bookkeeping firm, watched through the glass as Andrew Edrick was walked down the hallway past the elevator alcove and out through the service exit. He kept his chin up and his eyes straight ahead. His coffee was still on the desk, still warm. The forensic examiner found the Client Returns Amended folder at 9:41 a.m. She called Hargrove, who was in the parking lot with Andrew Edrick in the back of a federal vehicle. She described what she was looking at. Hargrove said, "Save everything." At 11:05 a.m., Andrew Edrick was booked at the IRS CI Atlanta field office processing facility. His photograph was taken. His fingerprints were taken. His belt, his watch, a Movado, he had bought himself to the year. The firm crossed $300,000 in revenue, and his wallet were placed in a property bag. He was charged with 22 counts. Wire fraud under 18 U.S.C. Section 1343. Aggravated identity theft under 18 U.S.C. Section 1028. A. Filing false tax returns under 26 U.S.C. Section 7206. Theft of government property under 18 U.S.C. Section 641. And money laundering under 18 U.S.C. Section 1956. His bond was set at $500,000. His attorney posted it the following morning. He was released at 8:22 a.m. on the 8th of March, 2023. He walked out into a grey Atlanta morning. His wife was waiting at the curb. They drove home without speaking. The house in Lithonia still had his son's school photos on the refrigerator. The Mercedes was in the garage. The floor safe had been removed by federal agents the previous afternoon. Before we get to what happened in that courtroom, if you want to see more cases like this, cases where the people entrusted with your most sensitive financial information exploited that trust for years, subscribe now and hit the notification bell. We cover these stories every single week. The grand jury returned the indictment on the 22nd of March, 2023. Andrew Edrick's defense attorney, an Atlanta federal defense specialist named Howard Baxter, spent the next 7 months exploring every available avenue. He argued that the altered returns were the result of aggressive but legal tax optimization strategies that had been mischaracterized by investigators. He argued that clients had, in some cases, verbally authorized deductions that were never documented in writing. He filed motions to suppress the computer evidence, arguing the search warrant exceeded its stated scope. The motion was denied. In October 2023, facing the Client Returns Amended folder, 416 client comparisons, and a financial trail that a forensic accountant described in open court as one of the most clearly documented tax fraud schemes I have reviewed in 23 years, Andrew Edrick pleaded guilty to all 22 counts. Sentencing was scheduled for February 2024. The victim impact phase took 2 full days. Tanya Brewster, the nurse whose return was the first to be altered in February 2017, testified on the first morning. She was now 43 years old. She came directly from a night shift and had not gone home to change. Her voice was steady, the voice of someone who had decided before she walked into that courtroom that she was not going to break in front of him. I trusted Andrew because he was from where I was from, she said. I trusted him with my earnings, my savings, my social security number, everything. When the IRS sent me a bill for taxes on a business I had never operated, I didn't even understand what I was reading at first. I had to take a loan against my retirement account to cover it. I am 43 years old, and I am starting over on savings I should have had by now. She paused. He didn't just steal money. He used my name, without my knowledge, without my consent, and he left me responsible for cleaning up what he did. Darnell Kiles, the warehouse supervisor whose divorce attorney had started it all back in October 2022, took the stand the following morning. I had no idea, he said. I handed him my W-2. I signed what he put in front of me. I trusted him the way you trust somebody you've known in the community for years. When my attorney showed me the discrepancy, I couldn't even process it at first. I felt like a fool, like I had been standing in a burning building and the man who lit the fire was the one telling me everything was fine. The most affecting testimony came from a retired school teacher named Gloria Simmons, 71 years old, a widow who had used Edrick Financial Solutions since 2013, 9 consecutive years. She had referred 11 people to Andrew. 8 of them were also victims. "I sent my sister to him," she said. "I sent my neighbor. I sent the woman I went to church with for 30 years. I told all of them he was honest, that he was somebody you could trust." She stopped. She looked at the defense table, where Andrew Edrick sat with his hands folded and his eyes on the surface in front of him. "I don't know how to face those people. Some of them won't return my calls. I told them he was good. I believed that. I really believed that." Sentencing was delivered on the 28th of February, 2024, in courtroom 1804 of the Richard B. Russell Federal Building in downtown Atlanta. Judge Carolyn T. Lawson, a 17-year veteran of the Northern District of Georgia, had presided over federal fraud cases across 2 decades. She was not easily moved by the mechanics of financial crime. She had seen the spreadsheets before. She had seen the shell companies before. She had seen the floor safes before. What she had not seen, or at least what she said from the bench she had not seen in quite this form, was a defendant who had built his entire business model around being the person his community trusted most. "Mr. Edrick, you did not stumble into this. You did not find yourself in a difficult situation and make a bad decision. You built a professional practice deliberately, carefully, over years, on the trust of working people who came to you because they believed you were one of them, because they believed you understood their lives, because they believed you would protect them. And then you used that belief as the instrument of the crime. You identified which of your clients were least likely to notice. You chose the people who trusted you the most. You signed their names to returns they never saw. You cashed refunds they never received. And when the IRS came looking, you fabricated documents to make it stop. And then you went back to the same clients and did it again." She paused. "There are 416 people whose names appear in this case. Most of them are not in this courtroom today because they cannot afford to take a day from work. They are the nurses and the bus drivers and the retirees and the cafeteria supervisors who came to you because they needed help and believed you were offering it. They trusted you with the most sensitive financial information a person possesses, and you used it to rob them." She set down her notes. The sentence: 168 months in federal prison, 14 years. Full restitution of $2,903,644.17, payable to the IRS and to affected clients as directed by the court. Forfeiture of the Lithonia property, all 6 bank accounts, the Mercedes-Benz GLE 450, and the contents of the floor safe. Permanent revocation of his CPA license. Lifetime bar from serving as a paid tax preparer or financial advisor in any capacity. Andrew Edrick was remanded into custody immediately. He did not look at the gallery as he was led from the courtroom. He did not look at Tanya Brewster, watching from the second row. He did not look at Darnell Kiles or Gloria Simmons or any of the 19 other victims present that morning. He looked at the door. Andrew Edrick was designated to FCI Jessup in Georgia, a low-security federal correctional institution, 250 miles southeast of the Decatur Office Park, where he had spent 11 years building and then dismantling a career. He will be eligible for release in 2035. He will be 56 years old. The house in Lithonia was sold by the federal government at auction in September 2024. It sold for $741,000. The proceeds were applied to the restitution order. His sons transferred to public school in the fall of 2023. They were 11 and 13 years old. The younger one asked his mother when his father was coming home. She told him it would be a while. The Mercedes was auctioned for $51,000. His wife filed for divorce in November 2023. The filing cited irreconcilable differences. Of the 416 victims, 311 have been partially reimbursed by the IRS through its Identity Theft Victim Assistance Program. The process required each of them to file amended returns, submit identity verification documentation, respond to IRS correspondence, and wait in many cases more than a year for resolution. 87 of the 416 had faced collection actions from the IRS before the fraud was confirmed. 3 had their wages briefly garnished. 1, a home health aide named Brenda Cofield, had her car repossessed after an erroneous federal tax lien triggered a default clause in her financing agreement. She had been making every payment on time for 2 years. She lost the car in January 2023. She didn't get it back. Tanya Brewster continues to work as a registered nurse at the same DeKalb County Hospital. She completed her retirement loan repayment in November 2024. She has not hired a tax preparer since. She files her own return every year using software. She checks every line twice. Gloria Simmons has not fully repaired the relationships with the 8 people she referred to Andrew Edrick. 3 of them have stopped responding to her calls. 1, a woman she had known for 30 years, told her that she didn't blame her, but that she needed time. Gloria said she understood. Privately, she wasn't sure she did. Darnell Kiles's divorce was finalized in April 2023, 6 months after his attorney filed the complaint that unraveled everything. The fraud documentation became part of the settlement proceedings. His attorney later told a reporter it was the most unexpected piece of evidence she had seen in 16 years of family law. The IRS implemented enhanced review protocols for e-file preparers in 2024, including cross-referencing of refund destination accounts against client primary financial institutions and statistical monitoring of Schedule C activity for preparers whose clients are predominantly W-2 wage earners. The Form 8879 has not been changed. Clients still sign it. Most still don't read it. Andrew Edrick will be released from FCI Jessup in 2035. He will owe the remaining balance of $2.9 million in restitution, accruing interest. His CPA license is gone. It will not come back. His father, Raymond, still drives the same route through DeKalb County every morning. He is 69 years old. He has not spoken publicly about his son. Neighbors who know the family say he still waves out the window at the same faces on the same streets, the way he has for 27 years. He raised his son to account for every dollar. His son did, just not the way he meant. That case will stay with me. But the one on your screen right now, the betrayal runs even deeper. Click it.